Chris. I know you were saying that you think 2021 silver is going to outperform gold. Hello there, my friends. Chris Marcus here with you for Arcadia Economics on Arcadia's holiday silver party night. And fortunately, my good friend Chris Marchese of GoldSeeker, SilverSeek, and GoldSeeker, which we'll find out a little bit more about in a little bit, is joining me here. We're having a lot of fun talking about glorious speculative opportunities that are available, that could become increasingly available. So, Chris, how about we start this one off with, by no means is this financial advice. This is to people who have worked in finance and been fortunate to be aware of derivatives and other things and silver. And so with that said, Chris, great to see you again. Thank you. Our fans met you at Silverfest, and nice to have you back on the show. How's everything going with you?
Oh, it's great to be back. Great to talk with you. You know, it's going. California's on lockdown again. It's one of the worst states. And I know it's killing small businesses, but other than that, you know, things are pretty good.
Yeah, well, I could imagine. And for any Californians who are locked down tonight, again, holiday party will be starting after the show tonight. Similar if you were at Silverfest where we had the video booth. So I will be there if you want to come talk silver with me, ask questions, or really, you know, I mean, better than that. I mean, silver this, silver that. I think it's like for people perhaps in California where it's like want to talk with someone else who's seeing the same reality. Well, if you want to connect with people that are seeing the same planet, come and join us. Link in the description field below. And fortunately, before we get started here tonight, I would like to mention, this is fortunate because I know Chris, a gold and silver mining stock expert, you're familiar with tonight's sponsor, Bluestone Resources, that has some new drill results here. And perhaps, Chris, I will defer to your great mining stock analysis. Would you like to share how maybe someone who's new to Bluestone or mining stocks, when they see a press release like this, what you take away from it or what they should be looking for?
Sure. So, you know, I like Bluestone very much. Now it's part of the Lundin group of companies, which have created immense value for shareholders over time through their plethora of different companies. One you might know is Lundin Gold. So when looking through these drill results, first I like to look at, you know, I hope that something's relatively wide, so 4 meters or greater. So in this case, you know, we have two, the 6.1 meters at 25 grams per ton. That's very great intercept. Then we got 7.2 meters at 26 grams per ton. This isn't cut, so the true width is likely less, but it is a nice intercept nonetheless.
Cool. Well, I appreciate you sharing that. I found that really helpful because, yeah, even just deciphering some of the language that the geologists use, I find is often, it's just new to a lot of people. So thank you for sharing that. And thank you, Bluestone, for bringing us tonight's episode. Here is what it looks like when you click on that link below. And if you want to join us, hang out, talk silver, drink some eggnog or whatever else you'd like, and just celebrate what an incredible year it's been. Chris, I know you've experienced this too. There's a lot of people who've been waiting for years, invested, whether it's their money, like you, their careers, and perhaps, well, maybe some people are ready for still even higher gold and silver prices. There's still a lot of good stuff happening in the industry, even where we're at now. Would you agree?
Oh yeah, I mean, even if we had flat gold and silver prices for the next 5 years, there's still a tremendous amount of money to be made in the mining stocks. On average, gold stocks, gold producers, and gold development companies are trading with an implied gold price of, you know, between around $1,650 an ounce, while you know, spot is at what, about 1850, so $250 higher. And at these levels, that's pure profit prior before taxes. So I mean, that adds in itself a lot of value. And even when we were up at $2,000 gold, 1950, the spot price or the implied gold and silver prices were trading 10, 15, in some cases even 20% below the prevailing price at the time. So, I expect 2021 to be a big catch-up year for mining stocks, um, unless, we get distracted. People get distracted with the mainstream momentum stocks or by going big into crypto. I think crypto Bitcoin will have a good year. It's looking good on the charts. But yeah, and generally speaking, I think silver is ideally positioned to just have a fantastic 2021.
Well, I'm excited about what's happening. I think for the things I'm doing, I've learned really to be careful about timelines. So, although, gee, finally we saw some movement this year. I know people, it's a little bit off the highs, but still, we're out of the teens. That was some progress, and you'd think there's a lot to suggest that we could see some movement in 2021. Chris, I know you were saying that you think 2021 silver is going to outperform gold. I'll pull up the charts here, but what would you say to folks there? As we see silver at 25.30ish, let's call it. It's Wednesday afternoon, gold 1860.
So in 2021, I expect, gold and silver to be driven by a few forces. One of them is headline inflation. While I don't see it picking up, to 6 or 7, 8, 9% where it actually is, at least according to John Williams of Shadow Stats, who keeps track of how inflation was measured during the 80s, and it's running about 9% right now. I do expect headline inflation to possibly reach 3, maybe 3.5%. And under that scenario,
we'll almost reach that Fed's new target inflation of
yeah,
4, 8, some vague number where.
I know it doesn't make any sense. Anyway, at any rate it goes to 4, 5, 6%, they'll justify it. Oh, we're looking at a 20-year average,
Yeah, of course.
And the inflation, we recently announced was a $900 billion rescue stimulus / rescue package, which is the second largest in U.S. history. And I think this is only part 1A of the stimulus. I think part 1B will also consist of maybe more bailouts and more so bailing out states and municipal munis. So, I expect that to be around a trillion or so. So in total, I would think about 2 trillion. And unlike those, say, in 2008, and more like that earlier in the year, this is going to be direct inflation. It's going to, like helicopter money. People are going to receive now $600 stimulus checks each. There's a lag period between monetary inflation and the time it takes to show up in consumer and asset prices. Another thing is, because of COVID this year, the savings rate has exploded to somewhere between 14 and 16%. So I expect that to fall next year, and in turn that would increase the velocity of money, which is part of the inflation equation. So, and then if you think about it, silver, it's been money in more places, more times throughout history. The US was founded on a silver standard. The mining ratio of silver to gold is only about 8.5 to 1. Silver has less above ground inventories than gold. So, I mean, based on those things and both being monetary metals, and I see maybe not next year, but over the next 3 to 5 years, a big contraction in the gold to silver ratio. I mean, sub 20 to 1 wouldn't be surprising at all. So, and if you want even more torque, you buy the silver miners, although there are very few now,
Yep.
because they were essentially forced to acquire gold mines to grow during the days of the bear market. Those will provide significant leverage to the underlying price of both silver and gold.
Yeah, and again, along the lines of our disclaimer, silver stocks not for the faint of heart. So when it goes well, it goes really well. When it goes the other direction, it can be a little bit rocky, but get some hair on the chest. And Chris, you mentioned how there's actually less above ground investment grade silver than gold, which was one of the things that I found stunning as I started researching silver. Could you touch on that for folks, please?
Yeah, so most gold that has ever been mined, let's say 95, 96%, is still above ground. Whereas silver, it has a big industrial component because it is the best conductor of heat and electricity. And that, I think, about 600 million ounces, 650 million ounces of silver are consumed every year from industry. And now with this green revolution, silver, along with copper, nickel, those type of metals, will see significant demand growth from that side. So you got the monetary aspect and the industrial aspect. And so that's why, even though it's far more plentiful in the earth, there is it's hard to come up with an actual number given all the warehouse silver and the gold and silver that ETFs say they have, but it's highly debatable, especially the GLD and the SLV. We can assume conservatively that there's about 3.5 to 4 billion ounces of above ground silver and 5 to 6 billion ounces above ground gold. Give or take 500 million ounces for each, but I mean, you get the point. There's less silver than gold. And silver's always been the people's money, while gold has been more used in international trade.
So it sounds like you're expecting some movement in 2021 and still even more so in silver than gold for next year.
Yeah, and it's and silver has proven over time during periods of high inflation to be the better performing than gold, whereas gold actually does quite well during periods of deflation, which I don't think many realize. So I think that if we get headline inflation and a noticeable rise in consumer prices, I know my cost of living's gone up quite a bit since
big enough that the CPI can see it,
Yeah, I know. I mean, so if you get a reading of 2%, 2.5% on the CPI, that's probably more like 8%, 9%. So if we get a 3% reading or higher, there's a lot of inflation.
Yeah, well, good thing we don't count the housing market in that one. Chris, I have a question here that I'm sure a lot of people might be wondering. Maybe some people know the answer, but you can bear with us. So Congress approves long-awaited $900 billion COVID rescue, which, at least in the initial article I saw, was only going to last through Q1, which, it's a little disconcerting. But they're gonna spend $900 billion, yet the debt clock shows us at 27 point something trillion in debt. So where does that come from?
Uh, sorry, where does all the
Where,
debt
where
come
does where
from?
does the money come from? Because it's not like you have
Oh, okay.
money in the
So,
bank account and they're already pretty in debt. So
yeah.
like I think a lot of people wonder, it's like great, we have the thing going, but where does that money come from?
So the Fed is monetizing an awful lot of debt, most of it these days. Um, so I think they're buying, right as of the last FOMC minutes or statement, they're buying $80 billion of treasuries a month, plus 40 billion of mortgage-backed
No,
security.
Chris, come on, be serious, man. What are they really doing?
Yeah, and that's what they say they're buying. I mean, it's probably higher. And you know, uh, it's interesting because I don't know if you're old enough to remember. I'm not, the days of the bond vigilantes.
I've heard about them. I'm wondering where they've been.
So when there's a big discrepancy between inflation and what bonds are yielding, they would short bonds, make a pretty penny. But since the Fed, I mean, we really don't have markets anymore, or as well functioning markets as we used to. There's the bond vigilantes aren't there anymore because they'll lose no matter what they do because the Fed has more money than they do. Um, that's why I also think at some point in 2021 they will implement yield curve control. And my guess would be that they implement that when the 10 year is yielding somewhere around 1.1 to 1.2%. And the reason for that is, I think at current rates, 12% of the budget will just be used to, the federal budget will be used just to service our debt. So imagine if we let interest rates float and it was 3, 4, 5, 6, 7%, you know, more than a third, maybe 40% of the budget deficit, a budget would be used to just service our debt,
So
which is insane.
would you say that it would be safe to say there are a couple holes in the government's plan, even if it's probably reckless and inappropriate of me to accuse the government of having anything resembling a plan?
Yeah, there are holes everywhere. They're just plugging one by making another. There's really no way out except for a big reset. Um, and we also have to worry about the dollar. The only reason we don't already have very significant inflation is that we've been able to export it abroad after Bretton Woods, after the end of Bretton Woods. The dollar became the reserve currency. So we've been able to export it to other countries. So when countries either um, explicitly or implicitly don't use the dollar anymore, those dollars are going to become flooding back here, and that will kill the dollar, and it will cause the cost of living here to just skyrocket.
Yeah, well, I mean, it's like on one hand, it's hard to imagine it happening, yet here we are. So, Chris, I know you also told me before we started recording that you did some research into what is actually in this porculus bill. And I pulled up Washington Post. I mean, I know this is a stunning headline of the year. I mean, it's amazing that it would occur so late in the year, but tucked into Congress's massive stimulus bill, tens of billions of dollars in special interest tax giveaways.
Yeah.
The motorcycle and beer industry were among the biggest winners. I would think people are still drinking enough right now, but I mean, it's not a surprise. I mean, it's maybe sad in a way that here, especially, I mean, if there's ever been a time where life has been uprooted enough for people, whether it's like you can't, like it's like, so every once in a while I'll go buy a bottle of wine. I'm going into the liquor store, I'm putting a mask on, I'm like, so do I pay him or am I supposed to rob him? You know, just like confusing. And then of course my heart goes out to anyone that, if their employment or source of income is affected, and then you find out, I don't even know what's in it. Chris, you said you were doing some research and you found out, what is our government printing $900 billion to do now?
So a decent chunk will go towards direct payments to individuals, $600 per person. That if a couple makes less than 150,000 a year, and that will decrease as income rises. So you have varying levels of that. But then you also have an extension of unemployment benefits that were enacted after the last stimulus package. You have, I think I wrote it down. So the biggest thing that is in this, and I think what not a lot of people are recognizing, is that this is going to have a big impact on the so-called recovery in 2021, because this time there's no liability protection against COVID-19. So if you hire someone and they get COVID, they can sue you. So that's going to make companies very tentative to hire. It's going to make them far more picky, and they're likely to hire fewer people, would be my guess. The PPP program will be extended, but the biggest beneficiaries of that are large companies that don't really need the money. Instead, like I live in California, so I know a lot of small business owners, and they are just getting killed. A lot don't think they're going to make it. And that's because of these shutdowns that are Gavin Newsom, our governor, is acting like a Roman dictator, essentially. Businesses should be allowed to operate, and if customers don't want to frequent them, they don't have to, and there's no one forcing them to do that. So unfortunately, I think there's going to be a big wave of small business bankruptcies in 2021. There will be, like the first stimulus package earlier this year, there will be loans made to small businesses, but again, that didn't help very much the first time around, and it's even less money to go around in this time around. So, that's the big things of the stimulus package. It's just like a mini version of the one enacted earlier this year. And I think there's going to have to be multiple, aside from rounds 1A and 1B, I think there's going to have to be at least one more stimulus package next year.
Yeah, that was my takeaway from my studies of the Austrian view of the credit cycle, where this sure feels to me like the point where not only do you have to keep doing it, but in that you're going to start seeing the rate accelerate. It's wild. On the positive side of that, I do think this is going to force, just in the same way that, the last 10 years, people they have kids going to, socialist colleges for 50 grand a year. And, the typical corporate cube matrix jobs aren't available. And, but it forces us to change the way we're looking at things, and I think for people that are able to adapt, there's going to be incredible opportunity. That's why I got into the silver industry, because I thought this is where we were heading. And, I would say, just since you touched on some of the labor challenges that are out there, I'd say if you're watching this show, or, you watch the show every night, if there are people that you resonate with, there's a lot of companies that, fortunately, all these gold and silver companies are doing well now. And, if you have an interest in this stuff, at least that's silver and gold saving the day once again during times of labor stress and COVID shutdown, industry doing well, which is exciting to me. But Chris, one more for you before we wrap up and head on over to the party, which again, folks, link in the description field below. I saw a week or two ago, Silver Institute was projecting a 318.5 million ounce deficit. We saw a surge in demand from bullion dealers. Obviously, a lot of the mines were shut down. Any thoughts on that, and where is that going to come from?
Okay, so the deficit, it's not really a deficit. So it's not like if copper was in a deficit, because a large component of that is investment demand, and they include ETP, so exchange ETNs, ETFs, and the like GLD, SLV, and all the ones that Sprott has, and all those. But we don't really know how much metal they actually contain. Because fractional reserve banking is legal, it is very unlikely that all of them contain the metal they say they have. And there's going to be a lot of people when silver gets back to 30, 35, or even 40 that are going to want to sell because they just want to break even on what they bought last cycle. I know there's a lot of those. So, I mean, well, it's always great to have a deficit in silver. We have to be careful in that it can change on a dime if somehow the central banks around the world decide to do the right thing, which is not practically impossible or realistically impossible. We would see a big sell-off in physical holdings and that type of thing. But supply is going down. Most of the silver is nearest the Earth's crust, so over time there will be less and less. Although temporarily, like for the rest of this bull cycle, when we get to higher levels of both gold and silver, more mines become economic, and those will likely come online, because I do think this will be a very prolonged bull market, because this is currency issues on a global basis, not an country by country basis. Like we see Venezuela, I mean, they've been in hyperinflation for years now. We've seen Zimbabwe go into hyperinflation in the mid 2000, so I think it was 2005, 2006. They're back in it again. So I expect a lot of that to continue. I think there'll be currency collapses or currency crises, currency resets. And, I think there's a high probability that a decent sized country adopts some kind of commodity standard, likely gold and or silver. So those numbers are always helpful, but they can't be, you have to take them for what they are, basically.
Yeah, I appreciate you pointing that out, because it's something a couple of guests have touched on in the past week, where this was a weird year for the supply and demand, especially the industrial side. But that a lot of it, if it's normally somewhat static, maybe growing over time, that really, again, what could a lot of people think would eventually spark something would be when investment demand picks up. And yes, their numbers include the ETP, which includes the investment demand, which was big this year. Although, Chris, may I add a tangent onto that? Would you say that hypothetically, let's say that, it's like some weird, like hypothetical world. Let's just say that the major central bank for the world's reserve currency was running a hyperinflation campaign, that even despite this, absolutely, keep in mind, Chris, we went from 1913 to 2008. We're down here. And then it's like, basically, even if you measure from, it's like, even including QE2 and all that stuff, in the last year, they doubled that. And now we just throw another 900 billion, which obviously, as you said, I mean, if anyone wants to take the under on that, please send me an email. And then that's, just leading us into Q2. So I mean,
we got a lot of that 900 billion, but we also have the 80 the 120 billion a month of what they're buying in
What's that?
treasuries and MBS.
I mean, there's this, which we could update. So, I mean, given that context, well, we never know for sure how investors would respond. I mean, it seems like we have a better chance of seeing Santa Claus come down our chimneys next week than the Fed ever unwind the balance sheet with leaving the system intact. So at least, if there's reason to suggest that investment demand would be strong again, and if it is, then you could consider that, actually maybe in better terms, like that basically there's a good chance investment demand, whether that's strong or weak, will be what determines what happens with the silver price going forward.
Oh, I think that's always what determines uh, the price beyond, the cost of production has something to do with it. Um, but yeah, and like I said earlier, a great way to play it: first have your physical gold and silver, and then speculate in the mining stocks. I mean, there are more conservative ones like the royalty streaming companies, the senior producers, down to your junior exploration companies where you can make an absolute fortune if you hit the right one.
Yeah, and said quite eloquently after my awkward stumbling to get to the point. So thank you. That's why I'm grateful we have you on the show. And for people who would like some more, Chris, can you share your part of SilverSeek and also a news site? Here's SilverSeek, which I'm a fan of. I saw one of my videos appears on here. I'm honored to be on the site from time to time, and let folks know about the stuff you're doing and where they can find you and what they should know about.
Sure. So you can find me on SilverSeek and GoldSeek.com. I'm the chief mining analyst. We also, Peter Spina and I also launched GoldSeeker.com. It's a newsletter, has a look over my shoulder service. So you get to see what we're actually doing with our own money, or you can sign up for our free list. So just enter your name and email address, and you will receive various company reports, market alerts, things of that nature.
All right, Chris. Well, I sure appreciate that. And hopefully we will see you on over in the holiday party, which the link is in the description field below. So Chris, thank you so much for joining me. Happy holidays. It's been great getting to know you this year, talking about a lot of exciting things going forward, and best to you and all of yours.
Yes, you as well. Great talking to you.